Hey everyone, welcome back to the channel. Today, we're diving deep into a company that's been making waves in the tech and semiconductor space, Broadcom Inc., ticker symbol AVGO. If you've been following the AI boom or just keeping tabs on the tech sector, you've probably heard of Broadcom. They're a powerhouse in semiconductors and infrastructure software, and with the recent buzz around AI chips, there's a lot to unpack. So grab a coffee, and let's break down everything you need to know about Broadcom as an investment opportunity. Stick around till the end for my take on whether this stock is a buy, hold, or sell right now. Let's get started. All right, before we dive into the numbers, let's set the stage. Broadcom is a global technology leader, and they've been at the forefront of some of the most exciting trends in tech, especially artificial intelligence. Their stock has been on a tear over the past few years, and with the semiconductor industry heating up, investors are paying close attention. Today, we're going to cover their business model, financial performance, recent earnings, valuation, and a full SWOT analysis to give you a 360-degree view of whether Broadcom deserves a spot in your portfolio. So who exactly is Broadcom? Based in the US, Broadcom Inc. is a giant in the tech world, designing and supplying semiconductor and infrastructure software solutions. They've got a massive footprint with around 37,000 employees and a product lineup that spans everything from chips for data centers to networking solutions and even software for enterprise customers. Under the leadership of CEO Hock E. Tan, Broadcom has positioned itself as a key player in high-growth areas like AI, cloud computing, and 5G. Their semiconductor solutions are critical for devices and systems that power modern technology, while their software segment helps businesses manage complex IT environments. It's a diversified business model, which is a big plus in the volatile tech space. Now let's talk revenue, because this is where Broadcom has been shining. In their fiscal year 2024, they reported total revenue of $51.57 billion, a massive jump from $35.82 billion in 2023. Breaking it down by segment, their semiconductor solutions business brought in $30.1 billion, while infrastructure software contributed $21.48 billion. That's a pretty balanced mix, showing they're not overly reliant on just one area. Geographically, Asia-Pacific is their biggest market, accounting for $28.42 billion in revenue, followed by the Americas at $14.97 billion, and EMEA at $8.18 billion. This global reach helps them weather regional economic hiccups, but it also means they're exposed to geopolitical risks in places like Asia. Still, the numbers are impressive, and the growth trajectory, especially in semiconductors tied to AI, is hard to ignore. Let's move on to their earnings, because this is where investors really start to pay attention. In their Q1 fiscal year 2025 earnings, Broadcom knocked it out of the park with revenue of $14.9 billion, a significant year-over-year increase. Their full-year 2025 numbers are even more eye-popping, with revenue hitting $63.89 billion and net income of $23.13 billion. That translates to an EPS of $4.91, up massively from $1.27 in 2024. What's driving this? A lot of it comes down to demand for AI chips and strong performance in their infrastructure software segment. Even with some softness in non-AI areas, the overall picture is one of robust growth. These results are a testament to Broadcom's ability to capitalize on megatrends like AI and cloud computing, and it's no surprise the stock gapped up after their latest report. Diving deeper into their Q1 2025 earnings call, the management team was pretty upbeat about the road ahead. They highlighted how their AI-related semiconductor revenue is seeing explosive growth, driven by custom chips for hyperscale data centers. They also pointed to strong adoption of their infrastructure software solutions, especially among enterprise clients looking to modernize their IT setups. While they acknowledged some headwinds in non-AI segments and geopolitical uncertainties, the tone was overwhelmingly positive. They're forecasting continued strength in AI demand, which aligns with what analysts are saying about the sector. It's clear Broadcom is positioning itself as a leader in this space, and they're not slowing down. All right, let's crunch some numbers from their financial statements. Looking at their balance sheet for fiscal 2025, Broadcom is sitting on $16.8 billion in cash and equivalents, with total assets of $171.9 billion. Their total liabilities stand at $89.8 billion, giving them a debt-to-equity ratio of about 0.83, which is manageable but worth keeping an eye on. On the income statement side, their gross profit margin is a healthy 67%, and their net profit margin is around 36.6%, showing they're not just growing revenue, but also keeping profitability high. Return on equity for the trailing 12 months is a solid 32.9%, which tells me management is using shareholder capital efficiently. Free cash flow for 2025 was a whopping $26.91 billion, up from $19.41 billion as in 2024, giving them plenty of room for reinvestment or dividends. Speaking of dividends, their current yield is about 0.75%, which isn't huge, but still offers a little income for long-term holders. Overall, these financials paint a picture of a company in strong health with the firepower to keep growing. Now let's talk valuation. At the time of this analysis, Broadcom stock is trading at around $3.2216, with a market cap of over $1.5 trillion. Their trailing PE ratio is a lofty 61.16, which might make some value investors pause. However, when we look at forward PE estimates for 2026 and beyond, the ratio drops significantly to around 34 to 37, suggesting the market expects strong earnings growth to justify the current price. Their price-to-sales ratio is also high at 22.37, but that's not uncommon for tech companies riding megatrends like AI. Comparing this to the semiconductor industry average PE of around 135, Broadcom actually looks relatively reasonable despite the premium. Still, with a beta of 1.26, it's a bit more volatile than the broader market, so you're taking on some risk for that growth potential. Let's break down Broadcom through a SWOT analysis to get a clearer picture of where they stand. Starting with strengths, their revenue growth is undeniable, hitting record highs thanks to AI chip demand and a strong software segment. They've also got a diversified portfolio across semiconductors and infrastructure software, which reduces risk. On the weakness side, their high valuation could be a concern if growth slows, and they've got some exposure to geopolitical tensions, especially in Asia. For opportunities, the AI boom is just getting started, and Broadcom is perfectly positioned with custom chips for data centers. Plus, 5G and cloud computing continue to offer tailwinds. On the threat front, competition in the semiconductor space is fierce. Think NVIDIA and AMD, and any slowdown in tech spending could hit them hard. Overall, the strengths and opportunities outweigh the risks, but it's not a slam dunk. You've got to weigh that high valuation against the growth story. Looking at recent performance, Broadcom's stock chart tells an exciting story. Over the past year, AVGO is up a staggering 46.7%, and over 5 years, it's soared by nearly 600%. That's the kind of return that makes investors drool. However, in the short term, it's been a bit choppy, down 4.1% over the last 3 months, but up 0.85% in the past week. This volatility ties into broader market concerns about tech valuations and interest rates, but the long-term trend is clearly upward. From a technical perspective, the stock is trading above its 50-day and 200-day moving averages, which is a bullish signal. If you're thinking short-term, watch for resistance around the $330 level. Recent earnings pushed it close to that mark. A break above could signal more upside, but a pullback isn't out of the question given the high valuation. All right, let's dive into an intrinsic value analysis to see if Broadcom's current price makes sense. Using a discounted cash flow model, I've factored in their free cash flow growth, which has been strong at around $26.9 billion for 2025, and projected revenue growth based on analyst estimates and industry trends. I've also applied a discount rate of about 8% to account for risk and market conditions, along with a terminal growth rate of 2.5% for the long term. After running the numbers, my intrinsic value estimate for Broadcom comes in around $350 per share, which suggests the stock is slightly undervalued at its current price of $322.60. This gives us a potential upside of about 8 to 10%, which isn't massive, but still indicates room to grow, especially if they keep executing on AI and software growth. Keep in mind, though, that intrinsic value is just one tool. Market sentiment and macro conditions can push the stock in either direction. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.